Charts and Economics live stream. It's great to be with you on this Tuesday afternoon. Stocks are generally up today, but what I want to focus on during today's discussion is the emerging opportunities, I think, in the global equity marketplace. So, for the last basically decade, really coming out of the global financial crisis, there was a brief period where this wasn't the case after the market crash in 08, 09. The US share market has been the place to be for traders and investors, meaning that you've been able to obtain rates of outperformance, higher rates of return compared to equity markets abroad. So that means the US has been outperforming countries like China, like Japan, Germany, France, England, Canada, Mexico, Brazil, whatever you want to call it or talk about. For the most part, obviously, there's exceptions here and there. But what I want to do today is look at some of these countries. We're going to go through a list of about 30, 40 global equity ETFs and just talk about which ones may have the best opportunities over the next 3 to 9 months, because I think, especially if the dollar correction continues, and that's not a guarantee by any means, especially since the Fed is still maintaining its rate hike trajectory, maybe slowing it down, likely slowing it down over the course of this year. But I think what we're going to see is global stocks finally play catch up on a valuation basis and basically have tremendous potential for opportunity when it comes to outperformance looking at global stocks. So without further ado, let me go ahead and share my screen here. Start off by looking at the S&P 500 before we dive into the global equity marketplace. We started off the week by rallying to a new high. We had a Santa Claus rally that generated a positive return on the year, or on the period, that is, that 7-day period. The last 5 days of the calendar year and the first 2 days of the new calendar year. That was a positive return period that portends positive omens, generally speaking. And now we're in the period, and the saying to encapsulate the period that we're in is as goes January, as goes the year. And I put out a tweet about it about a week ago or so, how, it does not always work, but it works enough for it to be an observable phenomenon in markets. And then so that's what we like to observe in stocks. So taking a look at the S&P 500, we bounced off support in the $3,800, $3,900 area. That continues to hold notably, where if we can get a close above 3,900 today, that would be most constructive. But we've been talking about these levels for quite some time. We have resistance in the 4050, 4200, and unless we can get back above there, we are by no means out of the woods, even though most recently this low that just formed over the holidays could be construed as a higher low and the first step in the reestablishment of an uptrend with respect to the trend. So the key that we need to see is really for prices to take out the highs from mid-August. If we do that, I think that pretty much confirms a bottom. And so we just have to be on alert. But there still is a lot of bearish sentiment. It's like all the big banks and all the analysts calling for S&P 3,000, 3,200. So the consensus trade is lower, and we know that markets love to basically inflict the most amount of pain on the most amount of participants as they can. So I think the pain trade is higher. So that's important to keep in mind as we move forward into the first quarter here. So we're going to go in alphabetical order. Well, not exactly. I'm looking at my list here. But we're going to run through. We're going to hop all over the world. Start off with Argentina. Ticker for the Argentinian ETF is ARGT. You can see here Argentina's been in a pretty significant bull run. And you can see here that Argentina has already taken out the highs from 2022. So that is some pretty notable relative strength here. And it looks like, we could be trying to break out from a massive saucer pattern. So the problem with Argentina, you always have to, take into consideration the currency factor in this case. Obviously the Argentinian peso has been experiencing hyperinflation more or less. People talk about Venezuela. Argentina is not that far behind, but pretty strong bull trend here. And especially since December, we've had a rate of return since that low in December, basically of 21, 22%. So just goes to show, by buying country ETFs, you're basically buying the index of markets, of global markets. You can get pretty good rates of return in a short period of time. So, there's a very big universe out there, aside from just individual stocks or futures or options that, in theory might have some less risk. So Argentina is looking pretty bullish. And this is definitely a ETF that should be on your radar, a country that should be on your radar. Let's go to their neighbor and look at Chile. Chile, ticker symbol ECH, not as strong looking as Argentina, but nonetheless building a pretty interesting base here. I think that, if we can come back up to this resistance zone of 28.50, 29, we have what could turn into a nice saucer formation here. And Chile looks pretty constructive. Couldn't even provide a pathway for ECH to rally as high as $39 per share. So definitely keep an eye on ECH. I wouldn't be jumping into this now, but I kind of take that back at the same time. You have this little ascending triangle here, a little bit of a continuation pattern resolving higher from that, but I'm more interested in ECH if you can get back above 29 and stay above there. So that is what's going on in Chile, looking like a pretty good opportunity as well. Let's hop over across the pond and look at Denmark. Denmark not looking as good as the South American ETFs we just looked at, but seeing some notable improvements in the euro. And, in the Eurozone, Denmark is not part of the euro currency. They have their own monetary policy, obviously, so that's important to keep in mind. But we're seeing strength coming from the European continent for the first time in a while. And, to kind of digress a little bit here, it's important to look, again, when you're investing abroad through the lens of currency, because when we do eventually get to some of these countries that are part of the Eurozone, we've seen the euro rise. And when you see a country's local currency rise in conjunction with assets in that country, that is a really strong example of real returns. You have to look at global assets through the lens of real returns and through currency, because if a country's market rises by 10%, but the currency loses 2% compared to the currency that you're using, your real returns are only 8%. So Denmark looking pretty good. I would really like to see it clear this high from back in, what was that, March of 2022. So we had this resistance level right around $100 in the Denmark ETF. So not as strong as the Argentinian or Chilean ETF. So we're going to stick with the Nordic theme. This one, going over to Finland. Finland also trying to come out of a bottom. It looks like, not really. I probably wouldn't put this in a museum, so to speak. Actually, it's not even a pattern worth drawing, so I'm not even going to do it. But Finland here looking pretty interesting. If we can get it back above 38, 39, it's flirting with that right now. Have a little bit of bearish divergence in price in the RSI indicator, so wouldn't be surprised to see some consolidation down a little bit on the day. But Finland looking a little bit better, and I think the theme here is that we're seeing evidence mounting of massive bottoming formations, and we're seeing the leadership come from abroad. So again, like I began with in today's discussion, a lot of the bottoming formations, confirmations coming from abroad instead of the U.S., and that's been that's a change from what we've seen. It's a change in regime leadership, so to speak. So we're going to stick with Europe right now. We're going to go over to Ireland. Ireland's looking a lot better than what we just looked at in Denmark and Finland, breaking out from this rounding bottom formation here. And so Ireland's looking pretty good. Some notable relative strength again from Europe. We have an overbought reading in the RSI indicator. The first time that's been the case, going back over a year. So it looks like bulls have recaptured momentum in this country's equity market. That bodes well. When it comes to Ireland, wouldn't be surprised to see a rally back up to the $58, $60 level, which means that we could take out this high from January of 2022 in due time. We are now going to go over to the Middle East and look at Israel. Ticker symbol EIS. Israel not looking as strong as some of the other stocks that we looked at, but we will point out that there could be a good risk reward entry at current price levels. If I had to choose between some of the charts we just looked at and Israel, I wouldn't be buying Israel today, but we have that case of bullish divergence in price in the RSI indicator, a pretty steep downward sloping trend line. And the key when you break above trend lines like that is that it doesn't necessarily mean that the trend is over. It just means that the rate of descent in this case, because we're looking at a downward sloping trend line, is no longer effect. So I'd be most interested to see the Israel ETF break out above this August high, August 2022 high, in order to confirm the end of the bear trend. So really not that appealing of a country's equity market right now. We're going to hop back over to the Nordic lands and look at Norway. Norway, again, not really the strongest formation I see here. I think the best thing that we're seeing technically here is the formation of a higher low with respect to the trend. But we're going to want to see prices break out above this $25.50, $26 area in order to suggest that this is a low of significance. But similar to many of the other countries we've already looked at, and similar to a lot of the U.S. indices, with the exception of the Dow, which has already taken out its high from August. August 2022 was a very important time, technically speaking, because we formed pretty significant highs around that time in many equity indices across the world. So when it comes to Norway, I'm going to want to see prices exceed this high here in order to become a little more enthusiastic about the direction of this. We're now going to go over to Asia and look at the Philippines. So EPHE is ticker symbol. This is a nice looking chart and a pretty nice bottoming formation here. Looks like we have an inverted head and shoulders pattern. So we have the left shoulder here, we have the head here, and we have the right shoulder there. And what I particularly like about this pattern here is that the low associated with the right shoulder of the inverted head and shoulders formation is higher than the low associated with the left shoulder. And that typically means that the rate of a resolution higher, or the likelihood of a resolution higher, is greater. But we're testing the neckline here now. That's acting as resistance, and unless we can decisively clear it, we are not out of the woods yet. So it's important to let price guide our actions in that respect. A little bit of a bearish divergence signal here, but the fact that we took out that August high already does increase the odds that we get a confirmation of a reversal here and the reestablishment of an uptrend. But still need to see some improvements on that front. I want to see Philippines ETF stay above $27.50, $27 per share. So Philippines looking pretty constructive. Let's go back over to Europe and look at Poland. Poland's looking pretty good too. I like what's going on in this chart. Looks like we just completed a rounding bottom formation. So that looks pretty good. Big resistance in that, $14.50, $15 area broke out from this rounding bottom. And so, we have a couple overbought readings on the RSI indicator now. And the fact that it keeps, tagging overbought is a signal pretty much that a low of significance is complete. We can look at this resistance zone here in that 1625, 1630 area, taking out the high from June of last year. So Poland is looking pretty appetizing from a risk reward standpoint, I must say. We're going to look at Peru now. So we're going back to South America. Peru is also looking pretty good. I like this chart quite a bit, and looks like it has completed a bear market as well. You have a resistance zone there. You have a left shoulder here. You have a head, and you have a right shoulder there. So nice inverted head and shoulders formation. Once again, we see the low associated with the right shoulder coming in higher than the low associated with the left shoulder. So and look at these overbought readings as well. Peru is looking pretty good. Probably one of the better charts we've seen in terms of completing a bear market. So for Peru, I would have an upside objective in the $36, $38 area, basically a return back to its March 2022 highs at the least. Let's see. We're now going to hop over to Australia. ETF ticker symbol for Australia is EWA. Australia is starting to look much better. Had some issues there. Obviously, the Australian dollar has been a little more volatile than it normally has been. But here, too, we see an inverted head and shoulders pattern. So this is a pretty common pattern that we're seeing. And, I guess I'm going to spoil it a little bit. You can kind of see it forming a little bit on the U.S. charts, at least in the S&P. Not so much in the NASDAQ. The Dow has a totally different pattern as well. But Australia here, the key level is 23.50. If that clears, I think we have a new bull trend in effect here, and wouldn't be surprised to see EWA hit 27 per share. Let's go to Canada, our neighbors to the north in the United States. Here too, Canadian dollars lost quite a bit of its value over the last several months compared to the US dollar, but here too, we have a pretty clean inverted head and shoulders formation. So I guess the moral of the story, I'm not even halfway through my list here, but we're going to, pick up the pace a little bit here unless there's something that is really noteworthy. Canada is looking pretty appetizing as well. I wouldn't be surprised to see Canada hit $42 per share per the EWC ETF. We're going to wrap up our analysis of the Nordic countries with Sweden, because we already hit the other ones. We hit Finland, Denmark, and Norway. Here too, another inverted head and shoulders pattern. So again, we're seeing global strength, and it's crazy because a lot of these charts that we've already looked at have already broken out. I mean, they obviously haven't all done that, but compared to the U.S., we're seeing that that leadership emerge. So Sweden's looking pretty good too. I have an upside target in Sweden in the $48-50 area. Germany, the economic powerhouse of Europe. This is looking much better as well. This one, could make an argument that we're breaking out from a rounding bottom here, but I do want to point out this other pattern here. One of my favorite to trade, broadening bottom formation that unfolded as such, but, you could even say, you had left shoulder there, head here, and right shoulder there. So if Germany clears, $27, $28 per share, that pretty much confirms a low. And keep in mind, the euro has been rallying. So this is representative of net capital inflows into the Eurozone. Now, I must say, when we incorporate an understanding of what's happening geopolitically and the situation in Russia and Ukraine and all that stuff, if an invasion of Europe was imminent, would money be rushing into the Eurozone? I don't think so. So that, I guess, bodes well in the short term. That can change, obviously, pretty quickly, but you'll notice the overbought signals in Germany are looking pretty good too. Let's hop back over to Asia. Hong Kong. China's been one of the strongest markets. Obviously, Hong Kong is its own economic zone, but this is what we call a V bottom, right? So you have not even a very slight case of bullish divergence, but this is solid V bottom. Explosion higher, and it's testing resistance here in the $22 area, $22.50. If that clears, look out above, because I think I'm actually very, very constructive on Asian equities. We are going to hop back over to Europe and look at Italy, EWI. Italy is also looking better. We have, I would probably characterize this as a broadening bottom formation, and we're already breaking out of that. A little case of bearish divergence here, but this is looking pretty good overall from an equity standpoint. Wouldn't be surprised to see prices hit $34, $35 per share in Italy. Take a look at Japan. Japan, interestingly, I saw that inflation in Tokyo hit 4% this latest reading, and that's pretty significant, because the Japanese share market still has not recovered from its crash in 1989. So looks like we have an inverted head and shoulders forming here too. I'd be very bullish on the Japanese Nikkei. Well, we're not looking at the Nikkei. We're looking at the ETF here. If we can clear $57, $58 per share. Back over to Europe, looking at Belgium. Belgium, similar to, let's see, how would we look at this one? Yeah, kind of a V bottom, but if you really wanted to draw a rounding bottom, you could. Not the strongest chart that we've seen, but Belgium looks like it has a pathway up to the $22 area, give or take. Take a look at Switzerland. Switzerland's looking pretty good. Obviously, they have their own monetary policy. It looks like we have a inverted head and shoulders pattern unfolding here as well. So there's a left shoulder, head, right shoulder. Swiss market is looking pretty good. Malaysia, back over to Asia, EWM. This one's pretty much resolved higher from the head and shoulders, and just, very bullish right shoulder formation. Take a look at the difference between the low associated with the right shoulder and the left. I mean, that's a pretty tight coil around the neckline. So Malaysia's looking pretty good. Looks like it has a pathway to 27, 28. Next, we're going back over to Europe, over to Austria. Austria is looking pretty good too. Yeah, we got rounding bottom forming here. So, a lot of these, oops, How did that happen? There we go. Again, pretty much every chart I've looked at here looks more bullish than, well, especially the NASDAQ, but even the S&P, not so much the Dow, but, when you figure in the composition of the Dow, a lot of these multinationals, industrial tilts, obviously there's pharmaceutical companies and, like stuff like Apple in there and banks and whatnot. But I think that says a lot about the nature of the rally, because when you look abroad, wow, look at Spain, very strong. But when you look abroad, a lot of these countries don't have hundreds or thousands of stocks in their indexes like, the United States does. It might be 30, 50 or whatever. And they tend to be more industrial or legacy banking, major conglomerates, so to speak. So to see these types of moves are pretty good. Spain, I would call this a rounding bottom formation, looking pretty good. Almost on the precipice. Did it take out that high? Yeah, it did take out that high today from May. So Spain's at its highest level since February 2022. But, these aren't things you'll see in the headlines in the domestic financial news. Over to France. How's France doing? Not bad. Not bad. Yeah, I'd probably call this a broadening. Oh, yeah, I guess broadening bottom. Not, it looks bullish. That's all I know. So I'd have a target of 42, give or take a couple bucks. Over to Singapore. Back to Asia, Singapore. This one, rounding bottomer. I'm not going to judge you if you call it an inverted head and shoulders, but definitely a rounding bottom. You could say, I'm gonna go with the rounding bottom. I'm gonna delete this one. Rounding bottom formation. If it clears 1950-20, then I think that looks pretty good. Over to Taiwan, coming around the corner on the list here, probably about a dozen or so more. Taiwan, not the strongest one that we've looked at. Obviously, there's some geopolitical tensions that they're grappling with as well. It did break out from this, multi-month downtrend. But, if we wanted to assign an inverted head and shoulders here, I'm not really too keen on doing so. Because why? Because the low that would be associated with the right shoulder is lower than the left shoulder. So I'm really not too optimistic on Taiwan. That said, it did register an overbought reading on the RSI indicator back in November. So that is, a step in the right direction with respect to momentum. Let's take a look at the UK. UK is looking a lot better than it was. The FTSE. Yeah, this one you got left shoulder, head, right shoulder. So FTSE is looking nice and good. Mexico. I put out a tweet a couple of weeks back, long Mexico, short Canada, because Mexico is honestly probably one of the most bullish charts we've looked at. I mean, look at this breakout. And the peso is getting a nice bid too, the Mexican peso. So net capital inflows, I did see that, there's been some trade deals inked between the North American trade partners, U.S., or they're working on it, U.S., Canada, and Mexico. So to me, Mexico looks like it has a pathway to $60 to $64 per share. One could even make an argument that this is a cup and handle formation. And so, I mean, Mexico, I think you'd be irresponsible to I wouldn't be shorting Mexico, I'll put it that way. Okay, over to South Korea. Obviously a candidate for geopolitical tensions as well, given the border to North Korea. This looks like a pretty clean inverted head and shoulders. Here you got the left shoulder here. You got the head, the right shoulder. That's looking pretty good. I must say overall, I'd say South and Latin America, Mexico is probably the best chart we've seen. Take a look at Brazil. Obviously, they've had some issues there over the election results. I'm really not too thrilled about this chart here. I mean, this is kind of sloppy. Some might even call this a diamond. I mean, I'm just not, that's not even clean. So it's not a diamond. This is just choppy mess right now. Basically, Brazil would have to get back above 32 for it to look appetizing. Not really liking the situation there. It does have a slight case of bullish divergence here, so it still could rally. But, from a technical standpoint, I'm not too enthusiastic about it until it gets above 32. All right, over to South Africa. South Africa looking pretty good here. Pretty much coming out of a inverted head and shoulders formation. little bit of a concern with respect to the bearish divergence in price in the RSI indicator, so not out of the woods in that regard yet. We're going to take a look at China here, FXI. It's up over 50% from the lows of November, so that is a stratospheric rally. And here too, similar to Hong Kong, V-bottom. V-bottom, that's how I would call that. But here we had a case of bullish divergence in price in the RSI indicator. And I think China, obviously reopening, abandoning the zero COVID policy that has kept their economy locked down for basically 3 years. Investors are trying to bid them back up. Over to Indonesia. Indonesia, I would avoid this. Lower lows and lower highs, bear trend. Really not much to analyze on that front. Let's look at Saudi Arabia. Saudi Arabia here too, lower lows and lower highs. So, really not that interested on that front in Saudi Arabian shares. Kuwait, trying to form a higher low. Middle East not looking all that good. We looked at Israel too. So Middle East area of the world not looking that strong from a technical standpoint. Let's take a look at India, PIN. India, not bad. If we can solidify a higher low here and take out the high 2250, 23, that looks pretty good, but not really the cleanest chart pattern here. Yeah, there's really not. I'd be, okay, there's a downtrend. We broke the downward sloping trend line, but not really all that much to be excited about here. Let's take a look at Qatar. Qatar, again, coming off a low, lower lows and lower highs. So Middle East, reaffirming that thesis that Middle East is not looking that bullish. We have Thailand. Thailand looks pretty good. This might be tied with Mexico for the most bullish chart. Look at that. If it clears this, Thailand has a pathway to like basically $9,700 a share. Bigger the base, higher the space, right? I didn't come up with that, but it's a good phrase nonetheless. Thailand looks good. Turkey. Those of you that have followed the streams know that we've been very bullish Turkey for a long time. I think it is time to take some chips off the table. Turkey's selling off. It's had a pretty impeccable rally. I mean, if we go back to December 2021, went up more than 170, about 160%. And so here, we were rising within a channel. And once, let's see here. There we go. Yeah, I mean, it looks like we're probably going to break that. We can even tighten it up a little bit and put it, right there. So the rate of ascent is no longer an effect in Turkish equities. So probably, we are pretty much scaled out of this position, a little bit left, a little bit of a runner. But as I look at these other ETFs, probably going to change that. And last and certainly not least, United Arab Emirates. Sticking with the theme, this actually is probably one of the most bearish ones. This looks like a inverted saucer formation. So from what I've seen today, Europe's looking bullish. Central and South America's looking bullish. Asia is looking pretty bullish, but the Middle East is not. And U.S. is not the strongest one technically. So that's all the time that I have for today. I went way over what I thought I was going to do, but hope you enjoyed it nonetheless. Thank you for watching. You can find our work at www.mmacycles.com or at www.benzinga.com. We have fantastic reports on both through both of those websites. We encourage you to check it out. Thank you for watching, and we will